Gold has now made fresh all-time highs for 9 straight sessions in a row, and traders are asking how much more room is left in this tank. Right guys, gold just hit 5,600 today, up about 29% year to date, which is just staggering for something that is considered as both a hedge as well as a store of value. Now, with the yellow metal rising to fresh all-time highs for the past 9 sessions in a row now, I'm getting a lot of questions asking how much more room is left in the tank. And right now, gold's run higher is not really just one thing, it's a series of drivers all pushing it up in one go. Firstly, we have central bank demand, with banks, especially China, continuing to buy gold, creating a lot of demand in recent weeks. We also have the options market continuing to bet on more upside, with a surge higher in 1-month risk reversals. Thirdly, we have the ongoing geopolitical situation, which seems to bring fresh uncertainty almost every week, and that has obviously seen a lot of allocation to gold as a hedge against that uncertainty. We've also seen recent weakness in the US dollar providing further support for the precious metals, and we have ETF holdings continuing to show robust demand from retail investors. So right now it's more a combination of many factors as opposed to just one specific driver. Now, the problem with that from a risk management perspective is that you need to see majority of these drivers cool to have conviction that the move has stopped from a fundamental point of view. But what's very important to understand is when moves go parabolic like this, at some stage the move ceases to be about the fundamental case and momentum takes over. It becomes a volatility and a flow game, as every new high sees more and more people jumping in, trying to chase it even higher, perpetuating more upside. And of course, there's also a lot of liquidity, because there has no doubt been millions and millions of dollars lost on people trying to call a top. And as those stops gets triggered, it opens up more room to run high. Now, we all know these moves usually end up the same way, with nasty, eye-watering and violent pullbacks. But we also know it's foolish trying to call a top. That means whether you are long gold or short gold right now, there's only really one thing you should be watching, and that is implied volatility. Implied volatility for gold is currently trading at 30%, which basically implies a roughly 2% range per day, or about a 4% range per week, which is very, very spicy. So that means whether you are trying to chase this higher or trying your luck with a flush lower, position sizing matters a lot. Be careful out there.